let's run this thing back. We're back, and I don't know what in the Bart Simpson this is, but I want it to Bart Simpson completely down and then fly higher because an in. I want an entry. That's literally why. I am sick today, so bear with me. Holy, I don't even know what it is. I don't know if it's hay fever or what. But let's have a little look at the Telegram. BTC continues to inch closer to 95k resistance. Historically, the more times the level is tested, the weaker it becomes. RSI and stochastic RSI are crossing to the downside, but any positive news could change that. Still waiting for the daily close above 96 or below 93. Very thick liquidity is building between both areas, and whichever way we break will be violent. I still remain focused on alts, as those are still the plus EV trade. Okay. I was actually looking at degenerate altcoins, and I don't think this is the way forward, man. Because you could get rugged easily. There's a lot of things and a lot of stuff that goes up and then goes down. It just ain't worth it. Stay away. I was looking at this right here. Look at it, it's completely rugged. The chart's effed. What is the fear and greed index saying on a day like today? We're in neutral. Casper is falling, which is good because I got out at 10.8. Local top 10.6, whatever the hell it is. And let's look at the ruggery of this as well. Holy madness. What is Bookmark saying? Because we actually need to look at some news. Let's look at
What's up,
this.
guys? QA here. I have Caspa up on the screen. This is the one-day USD price chart. And so just checking in. Last time we talked, it was back here on 4/11, April 11th. We were talking about 5 moves to get us back up into this area between the 618 and the last high, followed by an A, B, C to refuel before going off into a true alt season. And so Caspa looks like it just completed its first wave. We were guessing that it was going to get up here to the 309 at like 9.5 cents, and it actually exceeded it. And we can see it came up to the 382 right around 10.5 cents. So this wave exceeded our expectations a little bit. Right now, working on the second wave. So that second wave, I mean, could it be done? Sure. It's really going to depend on the markets. Let's see how things open up here. We're still, an hour and a half from opening. But what would make sense now for this second wave is it could come back down and test the 8.5 cent level if this 9.5 cent level doesn't hold. There is a chance that it does. We tested this high right here going back. But again, not too concerned with the intraday stuff. We got a little bit extra. We were about, what was it? Yeah, we were like, 14% off. But not too bad when you're coming off a bottom that went up 110%, right? So exceeded us there. Second wave, it would make sense to come test the 236, but again, we haven't closed yet on the daily below the 309, so there's a chance that if that holds, it could get started.
We have now, yeah, we have now. So I think we are coming down to about 8.3 cents. And then I think I will buy a bit more aggressively right now. I'm buying very, very unaggressively, if that's a word. What is wrong with my nose? Oh, my Kami's uploading 22 of the 5th. How far away is that? We're a few weeks away from Omikami and Ryujin Bros. It's coming. I've got a stack of both. The Atlanta Fed has revised their US Q1 2025 GDP growth estimate down from -2.4 to -2.7. Adjusted for gold imports and exports, they now see contracting by -1.5%. If this is the reported number, then we are 1/4 off a technical recession. Wow, that's good. Great.
Cryptocurrency and stocks. You can essentially rinse and repeat this one method over and over again to make consistent, predictable trades and get very rich off of crypto. First thing you have to understand is that pretty much all money is not physical. It's all numbers in a system. 11% of all money is physical cash, and 89% of everything that we currently have right now is created through loans and credit. The liquidity in our modern finance is based off of a credit system, not cash in circulation. Most people think that there's this money printer that prints more money and it goes into our circulation and that causes issues. This is not the case. We are under a credit system. and 89% of all money is credit. This is exactly why this debt clock, $36 trillion worth of debt, will never be paid off. They don't want to pay it off. Why? Because they'll stop getting interest payments and they'll stop enslaving you. Let me show you what I'm talking about. The Bible says the borrower is slave to the lender, as you can see right there. So when you borrow money, you're not just taking a loan out. You're surrendering control of your future earnings. So credit expansion actually debt enslaves people. But it doesn't just enslave people. It can enslave an entire government. Watch what I'm saying. Guess who the United States is enslaved to? The United States is enslaved to the Federal Reserve. The government funds itself by borrowing through treasury bonds, right? And the Federal Reserve often purchases these bonds by creating money out of nothing. So essentially, we as a country, United States, is enslaved to the Federal Reserve. This is where it gets really interesting. This right here pretty much exposes the entire formula. How do you make money off of this? It's very simple. When the cost of borrowing money controlled by the Federal Reserve goes down and we have low interest rates, then more people start borrowing for their cars, their houses, and in general for business opportunities. There's more liquidity in the system and the price of stocks and crypto increase. The prices of everything pretty much increases when the rates are low. And in the flip side, when the cost to borrow money on a $100,000 loan, let's say in this case it's 1% at the top, right? And in this case it's 10%. When the cost to borrow money is high, there's less borrowing and prices fall into a bear market. I use this to make so much money off of crypto. I just keep doing it over and over again. Remember, credit is 89% of all dollars in existence.
Yeah, true. You ain't wrong. Crescendo, 10 BPS in 6 days for Casper, that's mad. Most people misunderstand how markets actually work. Bitcoin didn't spike because of liquidity. That's surface thinking. Here's the truth. Only about 10% of money in the system is physical cash. 90% is credit through loans. When a bank approves a loan, it doesn't hand you someone else's cash. It creates a brand new deposit out of thin air. That new deposit becomes real money in the economy. This is why interest rates matter. Lower rates, cheaper borrowing. M2 money supply matters, but it's a lagging indicator. It reflects the results of interest rate policy and credit growth. So if you're still watching liquidity charts to predict the market, you're already right. Professionals track the cost of borrowing. Amateurs chase symptoms. Understanding this once and you'll never look at the market the same way again. That's mad. Last year wasn't a bull. Retail didn't take the bait, only put the tip of the this year you are going pencil sharpener of risk and FOMO, and this year, gents, we are taking the full sharpener go burr. That's mad, bro. His analogies are different. They are different. US, Europe not engaging well in trade talks. Well, that's great, and especially because they've minted one bill. Tomorrow they'll try something, and they'll top it and drop it hard. Both moves will be brutal, fast, sharp, ready to buy. Yeah, I think it'll be a quick drop. Look at Trump's. Wow, that's awful. Casper is better than all of them, I agree. Look at the BTC dominance. We might go down. Great. Bitcoin driven by scarcity. Altcoins are driven by hype. Fuck, altcoins are useless, majority of them. Casper might also be, but I just like the project, but I got to take emotion out of it. Altcoins dump 30 to 50% in the next 10 days. That'd be crazy, I can't lie. 13 days ago, Nvidia said the US government restricted sale of H2O chips to China. And now, somebody else is creating some H2O chips, aren't they? And Nvidia was down. Dollar's losing strength. Look at this. Actual garbage. The dollar is actual garbage. ETH search interest is at bear market levels. Max opportunity. Imagine not being in a sole short. Everyone's shorting. One more leg to trap late longs and liquidate easy shorts. Yeah. Michael Saylor, look what he said.
Rich that have all the money. Volatility was a gift to the faithful. It scares away the tourist. It scares away the lazy. It scares away the people that are already conventionally rich that have all the money. If you're a 20 something or a 30 something and you're willing to do the work, if you're willing to spend 100 hours or 200 hours, if you have more time than money, then the volatility of Bitcoin is a gift to you. If you have more money than time and you're arrogant and egotistical and you just pick the obvious, then if the volatility goes away, you buy Bitcoin. If people in the rest of the world knew what I know and they understood and they agreed with me, Bitcoin would go to $10 million tomorrow. And if Bitcoin went to $10 million tomorrow, I want you to think about how you would feel and how your viewers would feel, because you would lose 20 years of stacking opportunity during which you get to buy at less than $10 million. So the difference between $10 million and 100,000, that's what you give up if the volatility goes away and people start to agree with you.
Yeah, that's bad. That's true, you know. You ain't wrong. Alt season will start 7th, 8th of May. I'm hearing 7th, 8th of May a lot.
Volatility.
Maybe we won't get it. There's no alt season. Money is flowing towards BTC. Hidden bullish divergence. I like the sound of that. But we're getting a bear moon, so we might go lower. Who knows if this bear moon comes into play? This is one of them indicators that's worked, but we don't know why. But we need to look at it and treat it with some respect now. The weekly close actually looks good. Aside from that, that's all it is, bruh. See how it goes. The real crash is coming soon. Imagine if you get nasty to the crash, the roll is imploded. That is bullish. Hella bullish. Because we get a full-on bull market once it goes down. Damn, holy. Right, I'll catch you guys in a bit. This is a quickie one, because I'm feeling sick. And see you soon.